Gratuity is one of the important concepts to be considered for an employer-employee relationship. If someone has stayed in a company for a continuous service of 5 years, he is supposed to get gratuity. It is a kind of a gratitude which is shown by the organization to the employee for rendering continuous service. Gratuity while in service, that means if someone is in the service and he avails the gratuity after 5 years, he will have to pay tax on the income earned through gratuity. Whereas gratuity earned on retirement or resignation is exempted from the tax in the following manner. If he is a government employee, entire amount earned in form of gratuity is exempted from tax. Whereas if he is an employee covered under Payment of Gratuity Act, then there are three conditions. Least among those three conditions will be exempted from tax. The number one condition says 15 days salary for every completed year of service, in part thereof in excess of 6 months. To put in simple words, I will get 15 days salary for every completed year of my service in excess of 6 months. Means if I've completed 10 years and 8 months, then I will be getting salary for 15 days for 11 years. The reason being, since it is excess of 6 months, 10 years and 8 months is more than about 6 months, therefore it will be considered as 11 years. So the calculation is as follows: 15 days salary, so we take 26 days as working days in a month, therefore 15 by 26 into last salary drawn. Last salary drawn is calculated as basic salary plus dearness allowance into completed year of service, which was just mentioned now. Anything in excess of 6 months will be considered as a full year. So that means example 10 years and 8 months will be considered as 11 years. So that is the first condition, which says 15 days salary for every completed year of service, in part therein excess of 6 months. The second condition says amount specified by the government, which is rupees 10 lakh. And the third condition says amount actually received by an individual. Among these three, if the person is covered under Payment of Gratuity Act, the least among them will be exempted from tax. If the person belongs to the other employee category, then least among the following is exempted. The number one says half month salary for every year of service. Now, as compared to the payment covered under Gratuity Act, the only difference here will be half month salary for every year of completed service, which means 10 years and 8 months. Now here I will get gratuity for 10 years and not for 11 years as in the previous case. In this case, even if it is 10 years and 11 months, it will be considered as 10 years and not as 11 years. The reason being, I need completed service. So the first condition is half month salary for every year of service. That means whatever salary I have earned, half of that into the number of years of completed service will be considered. The second says amount specified by the government, which is the same as rupees 10 lakh. And the third says amount actually received by me. So the least among them will be exempted from tax. Another component is leave encashment. Leave encashment means, in simple word, if there are leaves which are allotted to me by my organization and I have not taken the leave, that means I have unavailed the leave, then certain organizations pay to the employees for the unavailed leaves, that is leaves not taken by them. Leave encashment refers to that component where money is paid to the employees for leaves, that is the paid leaves not taken by them. The condition for a government employee for getting leave encashment at the time of retirement is the entire amount which he receives in form of leave encashment will be allowed as an exemption, that is exempted from tax, whereas during service it will be taxable. So if I am a government employee and during my work purpose I couldn't take the allotted leaves to me and I go for encashment, if I am continuing my work, then I will not get exemption from the income earned through leave allowance, it will be taxable. Whereas if I am taken it at the time of retirement, entire amount will be exempted from tax. For a non-government employee, it is chargeable to tax on leave encashment while in service, whereas leave encashment at the time of retirement is considered in the following manner. The least among them, that is the 4 conditions we have, the least among them will be exempted from tax. The number 1 condition says period of earned leaves to the credit of the employee at the time of his retirement or leaving the job into average monthly salary, which means the number of leaves which I have not availed in the months will be considered at the time of my retirement. That is, let's say I have not utilized leaves for 8 months, so 8 months leaves will be considered together, 8 months into the average monthly salary. Whereas the second condition says the months into the average monthly salary, which is the months which are there, not the earned leaves months. The third says amount specified by the government, which is rupees 3 lakh. And the fourth one says leave encashment actually received at the time of retirement. The least among them is exempted from tax. Average monthly salary is calculated in the following manner. Salary is taken as basic salary and includes dearness allowance if terms of employment so provide, plus the commission. This is calculated by taking 10 months into effect. That means the 10 months prior to my retirement are considered while calculating the average monthly salary. So let's say I retire in the month of October and my salary from January to March in that time was 10,000 and from April to October was 12,000. So in this case, the salary, that is my average salary, will be considered as 10,000 into 3 months, that is January, February, March, which is 30,000, plus 12,000 into 7, that is from April to October. So 12,000 into 7 is 84,000. 30,000 plus 84,000, which is 1,14,000. Divide by number of months, that is 10, that will be 11,400.